Making $10,000 a month as a day trader has never been as simple and easy as it is today. The problem is that people overcomplicate it. So in today's video, I'm going to be sharing with you the 5 steps that if you just follow them, it is unreasonable that you won't achieve your goal of reaching $10,000 a month. Now, the first thing is, how do you actually get to $10,000 a month? So essentially what you're gonna need, number 1, is you're gonna need trading capital. The good thing is, in today's age, as you probably already know, you don't need to be risking your own money. We have prop firms. Prop firms are a company that are there to give you hundreds of thousands of dollars. You can have multiple different prop firms. You could have millions of dollars in funding, and it's actually very, very attainable, again, as long as you follow the 5 steps that I'm going to be breaking down in this video. 10 years ago, 15 years ago, prop firms didn't exist. Trading was only available exclusively to rich people who already had capital or to large institutions. So prop firms equal the playing field. So you need trading capital. And realistically, it is extremely easy. One challenge from one prop firm can get you to $200,000 in funding. So you want to go $200,000 in prop firm capital. That's one account from one prop firm. Bearing in mind, most prop firms will allow you to take multiple $200,000 accounts. So this is essentially the bare minimum. If you can just generate 5% monthly returns, that is your 10K a month. 5% on a 200K prop firm. That's the goal. So you want to get to 10K a month, reverse engineered that goal, what you need, because again, we don't want to be focused on the output, the end goal. 10K a month is the end goal. We want to be focused on what we need to do, what we need to have, and who we need to be in order to make that a consistent reality. Now, how do you generate a 5% monthly return? And how do you get $200,000 in prop firm capital? That's pretty much what we covered in step number 1 and 2. So again, like I said, it's genuinely never in the history of trading been as easy as it is today to make money, to make life-changing sums of money. The problem is that most traders don't know what to do. Half of trading, at least for me in my personal experience, half of trading is just about knowing what to do. Once you know what you need to do, then the second half is just about doing it. The problem is that most traders don't know what to do and they're doing the wrong things. So half of your battle can be won just by doing this. Step number 1 is technical analysis competence, right? Or TAC, which simply means your ability to read price action. The market is a language, and your ability to understand what it's telling you is directly proportionate to your ability to understand what's going to happen. Making money in trading is technically as simple as understanding where the market is going to go and where from it's going to go, and you getting involved in that move. Your way of doing that is by understanding the market. The market is speaking to you. It's your job to understand what it's saying and then take action based off of the information that it's given you. And so technical analysis competence, which is where most of you are at right now. The issue though is that most people think that this is what ultimately solves everything. They think if they can read the market, then that is what's going to get them to their goal of $10,000 a month. But there's still 4 very important steps that most people miss. So technical analysis competence is the simplest one, and it's probably where you're at right now. Just kind of one huge mistake that traders make at this level is they overcomplicate, right? They want to look at all of these different ways to understand the market. They've been convinced or programmed by society or maybe other traders that more equals better. The more information that I know, the better I will be at reading the market. The reality though is that's a fallacy. In fact, that's not reality. You just need one way that accurately tells you what the market is saying. Because with that, that's more than enough for you to be able to make money. You don't need to master every different type of technical analysis. You don't need to master every ICT concept. It's not how the game works. You need something that works, and then you need to move along. I've seen traders stay at this level for years on end. They learn some technical analysis, they try and go and trade, it doesn't work, they think it's the technicals that's the problem, they come back, they try to learn from someone else a different way of trading, this concept, that concept, and they just stay stuck in this area of analysis paralysis, right? And many of you maybe have already experienced this, maybe you're experiencing it right now. You don't need to overcomplicate things. I personally trade something called smart money concepts. If you're on this channel, there's a good likelihood that you already understand this because that's the main thing that I typically talk about. Smart money concepts is essentially, very simply put, a way to read the price from first order consequences. What that means is I'm looking at the primary drivers. I want to understand why price is doing what it's doing. The thing with indicators and patterns and candlestick understanding, they don't actually tell you what the market's going to do, they tell you what the market has done. And for me, that just doesn't really give me the context as to what's about to happen, because I need to understand what's actually happening, what's going on in the order flow. Because to move this market, to move any market, you need a whole lot of money. And it is not the retail market that is moving price, it's large institutions. And so I need to understand what they are doing, and smart money concepts is the superior way of being able to do that. So step number one is your technical analysis competence. In summary, your ability to digest the information that the market's telling you, make sense of that information, and then do something with it. And final thing, just pick one. Pick one way to read the market and just stick with that. That's how you will get the results. Step number two is essentially all about building an edge. You've probably heard this many different times. You need an edge, you need a playbook, you need a system, you need a strategy, right? An edge, simple, is a statistical likelihood of success. What that means is that you have a plan and you've tested that plan in historical data and it has shown you that it works. The data makes sense. Your stats are good enough for you to be able to make money trading this system. That's actually as simple as an edge is. The problem lies in the fact that nobody knows how to build an edge. And that's because nobody really talks about it. All you ever really see online is everything about technical analysis, and sometimes you'll see people talk about a trading strategy. A trading strategy is a very, very important part of you building an edge, but the problem still lies in the fact that you still don't know how to make that make sense. And so here's what I want you to think about when it comes to building an edge. Imagine the entire process of every single action that you could take in the market. That looks like this, right? You get to the market each day. Now you have to decide which pairs are you trading, which market, which pairs, which asset you're trading, what time are you trading, London, New York, Asia, what time are you trading, New York AM, New York PM, all day, right, which I don't recommend, but what time are you trading, what asset you're trading, right? What pair are you trading? Then you need to understand, how am I reading the market? So how am I developing a bias? A bias is, very simply put, your inclination of what's going to happen. And inside of that bias, it's basically taking everything technically and putting it into, you know, a format where you can say, okay, I think that the market is going to do X, Y, and Z today, based off of the concept that I have. You need to build a bias. Then you need to build, you know, your confirmations, let's say. Okay, now you have your bias, but now you only understand direction. How are you getting into the market? What do you need to see happen before you take the trade? How much are you going to risk when you take the trade? Are you going to take partials at any level? When are you going to move your stop loss to break even? When are you going to take your full position off the table? What are you going to do once you've taken the trade, right? How do you manage it? How do you reflect on it? How do you journal it? How do you collect your data? What about refinements, optimization, solving for inefficiencies in your system, right? Every decision that you could make leading up to the action of closing a position, they are processes. They are decisions that you need to make. And so building an edge is essentially making a plan for every one of those actions. So for me personally, I understand when I come into the market, I know, am I looking for buys or sells today? I know what needs to happen in order for me to look for a buy or look for a sell. I understand when to change my bias. I understand where I'm going to take a trade from, because I can be bearish for the day, meaning I'm expecting lower prices. My bias is lower prices, but that doesn't mean I'm just going to come to the markets and just take a short position. I need areas that I'm looking at trading away from. I need to understand confirmation, right? I don't want to just trade with the trend. If we're down here, great, we're bearish. I'm going to sell now? No. I need to understand the areas that I want to get into. And then when I get into my areas, I don't want to just sell from this level. I want confirmation. And then when I get that confirmation, I need to know, where am I entering my market? Where am I placing my stop loss? Where am I taking my profits? At what point should I take my risk off the table? At what point do I close the position, right? All of these decisions that you need to make essentially need to come under the context of a trading plan. That is built from your technical analysis concepts and competence. So you take all of your technical skills and then you put them into order. So this is organization. You're going to organize the concepts that you have into a plan. And that is essentially the first step of building your edge. But there's something, again, critical that so many traders make the mistake of at this step too. They get an understanding of technicals from YouTube or something like that. They get a trading plan. Maybe they watch a YouTube video and they hear someone's got a strategy, and then they take that strategy and that's all they have. And so now they're trying to take that strategy to the live market and start trading. The problem is that you actually don't know whether that plan has an edge, because an edge isn't just a strategy that's been taken over 5 trades, right? I see all the time. You go on YouTube, you see this 80% win rate strategy and they show you the video and they made money with the strategy and they show you 5 trades, right? The problem is it may have an 80% win rate over 5 trades, but does it have an 80% win rate when you take it on every single trade that happens for the entire year? I don't know. This is what you have to understand, because an edge isn't built over 5 trades. Anyone can make money over 5 trades, but that's not the goal. The goal is to make money month in, month out, consistently, year in, year out. And so you need to make sure that that plan works, which takes us on to step number 3, which is all about testing. This is where we really confirm our edge. This is the bridge from essentially theory, right? Theory of a strategy. You go to YouTube, you see someone's got this 5-minute trading strategy with an 80% win rate that made $1 million in a week. And you have that, great, but now it's just theory. You don't know the numbers on it. You don't know how many trades that it's been taken over. How does it actually work? There's so many different variables that you don't understand. This is why you must test. Testing is pretty much taking your technicals into the trading plan that you took and then going to a software, right? A backtesting software, and going, for example, let's say today, the date was the 1st of January, right? Let's say it was the 1st of January, 2025. Well, I need to take this trading plan and I need to go back to January the 1st, 2024, for example, right? That would be 1 year of data. I need to go back in time, and then I need to trade every single day trading that plan. So every time that everything aligns in the market that meets that plan, I take the trade, right? And then once you've done that, that is actually testing. Because now at the end of that period, for 1 year, you've taken every trade that meets that plan. Now you actually understand the data. Now you start to understand the statistics. Now you can really understand, does this actually have an 80% win rate, or is it more like maybe it has a 53% win rate? You need more data. And the way that you really understand whether you have an edge or not is by testing. And the way you test is you take a strategy, you take your trading plan. If this happens, I do this and I do that. All the different variables that are inside of a trading plan, You take it and then you go and test it on historical data. And then what happens for most people is they'll test that plan and they'll get all of their data back, and there'll be many inefficiencies in the data. Inefficiencies are pretty much things that could be improved. So if you have a trading strategy that has great potential, but there are just some things that you noticed whilst you was testing that strategy that could make this thing better. And so that is where you start advanced testing, right? And creating hypotheses. Essentially a hypothesis, if I try this, what will happen? If I don't enter on the 15-minute chart, what if I enter on the 5-minute chart? What if I don't wait for, a certain candle produce? What if I wait for a break of structure? These what ifs, and then you start testing these what ifs, and that's a hypothesis. And so essentially what we have now is you have a sound technical competence. You understand things. You understand market structure, liquidity, supply and demand. You've begun the process of building an edge. You've taken what you've taken here, you've put it into a plan, and now you're really understanding, does this thing work by testing? The reality is there'll be some loops of this testing that you may have to go through to actually make sure that you have an edge. Therein becomes a new problem, right? This is again, every single step here, right? If you imagine 100 different traders come in and their goal is to become profitable. They want to reach $10,000 a month. This is what happens. 70% of them drop off here. 70% of them either don't get a good understanding of technical analysis because they're learning the wrong things, or they stay stuck at this level, not knowing how to move past here. Another 20% drop off here in the edge because they don't actually understand how to properly build a trading strategy, because they don't understand all the processes, right? So they don't understand how to build a trading strategy. And then a further 5% drop off here in the testing because it's overwhelming and so many people don't know how to test. And so now essentially you're already at your point of where 95% of traders fail. And so with each step, the amount of traders that actually make it to that level substantially decreases, which takes us on to step number 4. Every trader at each step that they're on, they think that's the final step, right? I've been there myself. When I first started trading, I thought, if I just understand how to read the market, I'll just somehow make money. And then I realized that actually, you know what? I need a trading plan. So if I just put together a trading plan, well, now I'll definitely make money. And then I realized that actually, I don't really know if this trading plan is even working. And so I'm taking trades, but now I'm not confident in the trade I'm taking. Or when I lose 3 trades in a row, I start doubting whether my strategy even actually works. And then you start testing. And then I say to myself, okay, I've tested the strategy. Now I know that I have a strategy that works. And this is where so many traders can't get past, because they all think for their entire period is when they get to this level that this is the final boss. I have a strategy that I know makes money. That's the hardest part, right? Wrong. The next level is what I call the performance gap. The performance gap, very simply put, is the difference between your theoretical results. So you had a strategy, you tested it, you have a full year of data. That strategy in that 1 year returned 100% if you would have taken every trade and traded it perfectly. That is the capability of your trading strategy, right? So the actual strategy has the chance of making 100% in a year. But what happens? Traders have this thing called the performance gap, which is the difference between your theoretical results and your actual results. Because now the biggest problem that exists is you have to show up every single day and take the trades that meet your plan and not deviate from your plan. Don't close early, don't miss a day, don't hesitate on a trade, right? All of these things, you have to make sure that you follow your plan to perfection. That's a difficult thing to do. And so what a lot of traders experience is a performance gap. Some traders experience a small performance gap. The strategy could do 100%, and instead of 100%, maybe they get 20% out of their strategy. This was me in the beginning as well, right? I've been through in all of these steps, which is why I understand that this is the way to do it, right? I wish someone had explained this to me a long time ago. I knew that my strategy worked. I knew that it was great. But for some reason, in historical data, my strategy was averaging, 100%, 80%, 90%, 110% in this ballpark region per year. But at the end of each month, I kept on racking up these 3% months or these 2% months. And the reality is I was making money. I was a profitable trader, but I still felt like an utter failure. And the reason I felt like a failure is because number one, I had unrealistic expectations of what's possible. And number two is that I know I'm underperforming. And so if you're at that point right now, maybe you are slightly profitable, I want you to understand that this isn't a terrible place to be. It's a lot better than being down here. And it's also a lot better than other traders, which is a lot of them, where actually their strategy is profitable and somehow they still end up losing 40% in a year. They still end up blowing funded accounts. Like how many traders out there, maybe yourself included, you have a profitable trading strategy, you know that it works, and yet you're blowing funded challenge after funded challenge after funded challenge. Or you've got a personal account and right now you're sitting in 20% of drawdown. Hello? There's a huge discrepancy between your theoretical results and your actual ability to execute the results. So what's the solution? The solution is discipline. Now, that word gets thrown out so much, and honestly, I hesitate to use it a lot of the time, but it is discipline. It does come down to discipline, but it's a lot deeper than that, because a lot of people hear that and think, I just need to be more disciplined. I just need to be more disciplined. And whilst that is true, telling yourself that you need to be more disciplined doesn't work. I mean, you've probably experienced it yourself, right? I need to be more disciplined, I need to be more disciplined, I need to be more disciplined, which is basically what you're saying is, I'm not disciplined, I'm not disciplined, I'm not disciplined. And then you're trying to come into the market and you're trying to exert your willpower. You're trying to force your discipline on the market, but you don't even understand what's happening to you. You don't understand why you're not following your plan. And this is where psychology comes involved, right? The big problem here is psychology. And everyone tells you, every profitable trader, and I'll tell you myself, trading is 80% psychology. There are traders out there that say that's BS. I don't believe that they're real traders, because any real trader understands that the biggest battle that we face is our ability to control ourselves. The people out there that just say psychology is irrelevant if you have a good trading strategy, I don't believe that they're actually profitable traders. I'll be totally honest with you, because if you really don't believe that the biggest goal is to be able to follow your plan, then I'm not really sure that you've ever actually tried to follow your plan consistently. That's really the truth. The problem is psychology, and poor psychology, which is essentially disobedience, is what causes the performance gap. Your inability to follow your plan is why you aren't making money. If you're at a point right now where you have a profitable strategy that you've proven is profitable, your problem is psychology. Now, the thing is you're probably out there now after taking these trades, you're probably sitting to yourself on YouTube trying to look for new trading strategies, new ways to read the market, because for some reason, even though, I mean, it worked before, maybe it's just stopped working, right? And the reality is probably not. The reality is you're probably not taking the trades that you need to be taking. And so you need to figure out here, the big problem here, the $1 million, right? The $1 million problem, that if you solve this problem, genuinely will unlock millions of dollars, is your ability to follow your rules. And that comes from really understanding yourself, understanding your patterns, understanding your behaviors, understanding your triggers, and then overcoming those triggers. But here's the kicker. Again, you can do the psychological work, but until you do what's required at step 5, you don't actually know, number one, whether it's working, and number two, whether you're going to be able to sustain it. Because step number 5 is an operating system. And I'll tell you this right now. 1% of traders get to this level. Because if you get to that point, you've already mastered these things, right? You haven't necessarily mastered psychology, but you're doing the actual work required to bridge the gap. What you're missing then is an OS, right? An operating system. An operating system is a designated, centralized area where you look at everything trading related. You look at all the trades you've taken, the outcomes of those trades, why you took the trade, alignment. So was this trade in alignment with your plan, right? And then when you have all of this data and then you put in place a review system, right? A review system, which is a process that you go through where you review everything that you're doing on a daily basis. Every single week, at the end of the week, I go in and look at every single decision that I made in the market that week, and I understand this. How well were my outcomes? Did I make money? Yes or no? Okay, let's say, for example, I didn't make money that week. For me, that doesn't mean that it was a bad week. For me, a bad week is I didn't follow my plan. This one here, this is the key. Alignment. This is the most important data point. Was I trading in alignment with my plan? The problem that most traders have is their most important point is their outcome. Did I make money? If I didn't make money, it's bad. If I did make money, it's good. That's not how it works. Because being a trader, if you want to succeed in the long term, it is, and please, 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 if there's anything you take from this, it's this. A trader's ability to make money is proportionate to his ability to follow his plan. Excuse my messy writing. But a trader's ability to make money is proportionate. Proportionate means relative, right? If I follow it 10%, I'll get 10% of the rewards. It's proportionate to his ability to follow his plan. Successful trading is not, I made $5,000 today, but I didn't follow my plan. For you, maybe that's good. For me, that's dangerous. If I make money not following my plan, what does that tell my mind? That tells my mind it's safe to not follow your plan. In fact, not following your plan is good. That's the message that my brain makes. If I do that too many times and I feel good about the money that was made, guess what happens? Without even knowing it, in due time, you're gonna see your inability to follow your plan get progressively higher. So it's very important that you disassociate outcome and alignment, because outcome is nothing. Alignment is everything, because you should only be caring about alignment, of course, if you have these things, right? Again, if there's any trader out there that tells you that psychology isn't important, don't focus on it. If they give the context until you have an edge, I agree. But once you get past this point, it's all about you. It's all about you. There's nothing that trading strategies and technicals and the market can do for you anymore. Nothing. Now it's you versus you. Now every day you show up to the markets and the market's gonna mirror you. Mirror your ability to follow your plan. Mirror your impatience. Mirror your consistency. That's the key. So at step 5, you need an operating system, an area that you can look at all of your data and consistently monitor what's going on. Because what we need to be understanding is our performance, and this is how usual performance goes. We have highs, we have lows. We have high periods, we have low periods. We have high periods. If you are a human, you've experienced this in every single thing that you've done in your life. For me, here's what I want to do. I want to understand, when I'm at my low periods, what's going on? What am I doing? And can I be doing things differently? Because your actions equal your outputs, right? I think it's Newton's third law. For every action, there's an equal and opposite reaction. Simply put in, what you put in is what you get out. Your actions dictate the reactions of what you get. So it's everything about alignment. If you can have all of these things and you can put them all together and you do the work, it is impossible not to get to the point of 10K a month. And that really is just a starting point. $200,000 account, starting point. You can go way higher than this. But goal number one, let's get you to $10,000 a month. And that's exactly how you do it. Now you have to go and do it. And so again, you have two different options. If you would like to work with me and my team, we will take you through every single step of this. We will show you exactly how to read the market accurately. We will give you trading strategies, right? I have 2 trading strategies that are available for you with over a year of historical testing, day by day, trade by trade, for you to see and view all the data, everything, proving that they are profitable. We'll show you not only the strategy in testing, but more importantly, how you can test yourself. So you'll see me for hours on hours on hours on hours sitting there, taking trade after trade after trade after trade in backtesting environment, showing you the trading strategies that we trade. We'll solve all of these things for you. We'll give them all for you. Step number 4, the performance gap. 27 different psychological modules on why the performance gap happens, down to the deepest of your biological wiring, your self-sabotage, your limitations, your limiting beliefs. It goes so deep, to be totally honest with you. And your trading operating system. How to set up your trading operating system, what it should look like, how to use it, how to collect all the data, how to interpret it all. Everything that you need to get to $10,000 a month, I will give you. This is what you need to do. You can do it yourself, or you can do it with me, with my team. And if you would like to do it and get there faster, then down in the description, I'll leave a link. You can book a call and see whether or not it makes sense for you. But no pressure if you don't. This is still the journey you need to take.